On today's episode of the Brisbane Property Podcast, it is Market Update Day, and we are going to be reporting on the latest price movements in the house market and the unit market here in Brisbane. And we're going to take a historical view to see how capital city markets around Australia have performed since the pandemic and also over the last decade and the last 10-year period. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jenison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jenison.
Yes, welcome back, everybody. It is market update time once again. And already we are 6 months through the year. Who would have thought that we're already in the month of July recording this episode? But the Brisbane property market really has continued to see strong growth and demand throughout the first 6 months of the year, Scott.
It has. Nothing seems to have slowed down in Brisbane. It feels like quite a while ago now when we were talking about that monthly growth, and it has just seemed to continue and perform very, very, very well. So,
yeah, in fact, Brisbane over the last 6 months has been one of the top 3 performing capital city markets around Australia. Of course, that is the same over the last 12 months. But today we're really going to unpack some of the trends that we've seen across capital city markets from post-pandemic era, so from right back in 2020, but we're also going to look back 10 years from now to see how different capital cities have actually, performed so that we can actually see what that comparison looks like.
it's interesting. This information, just for our listeners too, Melinda does write a blog on this information. So there's actually some really interesting graphs on this if you want to go to our website.
streamlineproperty.com.au/blogs, and you'll actually see some of these articles.
Yeah, so you can actually read through some of the graphs that go with this information. Really important, and it really makes a lot of sense. And actually, when you look at them and you see how the market has moved, it's very, very interesting to see how it's changed.
So if we have a look at the data up to the end of June 2024, Perth's actually seen the largest increase in home values since the start of the pandemic. Now, you'll recall I said we're going to be looking back to see, what's been happening since 2020. And a lot of the CoreLogic data has been tracking since 2020 simply because we've seen really unusual and really strong growth in some markets in that time. So Perth is up 66.6% since March 2020, all those months and years ago when the onset of the pandemic became apparent. This is followed closely by Adelaide, the second highest growth capital city markets post-pandemic. That's up 63.9%. Not much difference in performance because Brisbane in third place is up 61.5%. Now, this is in the space of 4 years. This is a very short period of time. So for anyone that's been in the market here in Brisbane and they're looking to upgrade, some of these numbers might come as a surprise because the prices that you used to pay just 5 years ago compared to today are significantly different. And it's important for people to understand just how much markets have moved.
Yeah, it's incredible when you think about that 4 years and you're over 60%. Of an increase on a property value.
And if we compare those top 3 capital city markets, all with in excess of 60% growth over the last 4 years, compare those with some of the other capital city markets around Australia. So, for example, Sydney's growth over the same period has been 28.2%. That's the growth in median dwelling values. Melbourne is up 11.2%, so over 60% versus 11.2%. Hobart is up 28.1%. Darwin is up 25.7%. And finally, Canberra's growth has been 32.2% over this period. So there's been a huge divergence in performance of these capital city markets, with Perth, Adelaide and Brisbane really pulling ahead of those other capital city markets in terms of dwelling value growth.
It's interesting when you look at that and you look at the long-term growth over the decade. Brisbane remains one of the highest performing capital cities in Australia. Put to that, obviously, the Olympics coming up as well in 2032. You can see there's some fundamentals that actually lie really, really positive for the investment side in Brisbane.
Yeah, look, the last 10 years tells a different story, but Brisbane is still up there as one of the top performing capital city markets in terms of median dwelling changes over a 10-year period. Surprisingly for some, Hobart is actually the top performing capital city market when we look back over a 10-year period, according to CoreLogic data. So median dwelling values in Hobart over the last 10 years shifted 84.7%. This was followed really, really closely by Brisbane over the last 10 years. So Brisbane coming in at second place with 83.6% growth over the last decade. And in third place, Adelaide with 82.9% growth. So Sydney was behind Adelaide, followed by Canberra, Melbourne. And surprisingly, although Perth's had a huge run just in the last 4 years, over the last 10 years, Perth's market has only shifted 41.1%. So depending on what an investor is looking for or the prices that people need to pay to get into a market, this long-term view really does paint a slightly different picture to what's happened in that post-pandemic period.
Yeah, Perth's really had a bit of a spurt there on the last 12 months or so, where it's really shot up, whereas the others have consistently seemed to be moving up in the right direction.
That's right. And I think the thing that is important for property buyers to understand is a lot of this divergence in capital city markets is driven by the differences at a local level between supply and demand. So we all know that interest rates since the pandemic went to record lows. They reduced down to very low levels. And of course, subsequent to a period where a lot of people were able to get money very easily, interest rates then started to creep up. And now we've got interest rates at a much more stable level. We haven't seen much change in terms of interest rates over many months now. But what the main difference has been between capital city markets is the relationship between demand and supply. So the number of new listings that have been available for sale in the 3 leading growth capital city markets since the pandemic, Brisbane, Perth, and Adelaide, has been significantly lower as a comparison to the demand for properties in those locations. And an indicator that CoreLogic have used to assess this relationship is the sales to new listing ratio. So sales volumes can be tracked. That's the number of properties that have transacted in a given period of time. And that is an indication of the demand levels in a particular market. Likewise, the number of new listings that have been brought to a market can also be tracked and recorded. So when you actually determine the sales to new listing ratio, this can actually tell a story as to why we're starting to see different markets perform in different ways off the back of supply and demand imbalances. Now, if we've got a ratio of 1-to-1, that is, sales volumes are the same as the new listings in terms of that ratio, what that means is the market's likely to be stable. But when the sales to new listings ratio is greater than 1, it suggests that there's very strong selling conditions, as there's more than one transaction taking place for every property that becomes available as a new listing or for every all of the supply that's coming into the market. A sales to new listing ratio of less than 1 implies a weaker market. And in these markets, we're likely to see less upward pressure on prices. So we're certainly seeing for those capital city markets of Perth, Adelaide, and Brisbane, a sales to new listing ratio over the last 12 months of greater than 1. And that's also one of the reasons why we can explain the outperformance in these markets compared to other capital city markets. Because, for example, in Melbourne and in Hobart, we've got those sales to listing ratios less than 1. And of course, these are the softer capital city markets at the moment.
So you can obviously then the markets what you talk about there, and as you talk through that, Melinda, I know that I'm looking at, obviously, I've got the graph and everything in front of me, as I mentioned to everyone, if you have a look at that blog, and you can see that the likes of Brisbane at 1.2, Adelaide at 1.3, Melbourne 0.9.
That's right.
So that shows that ratio, obviously, and it does explain it quite well. So for those listeners that need those graphs, have a look at that blog and it'll actually help explain it really well.
But look, I think this is not a surprise to regular podcast listeners that tune into the Brisbane Property Podcast, because we have been talking about the supply issues here in Brisbane for several months. And in fact, for more than 12 months, we always talk about listing volumes. And we are able to report that up to the end of June, listing volumes are currently still 34% below the 5-year average here in Brisbane. That's new listings being brought to the market. So effectively, there's 1/3 fewer properties available for sale here in Brisbane, and yet demand does not seem to be suppressed at all. And that's why we continue to see this upward pressure on prices, because there's more than one buyer for every property that is listed for sale. And if it is a quality property, we're still seeing that depth of buyers, often more than 10 putting forward offers or registering to bid. It's obviously very property dependent and location dependent, but the demand is still strong for quality properties in more affordable price points.
Now, obviously, migration will have a factor on that. Now, my memory will probably let me down here, but I believe in last week's podcast we spoke to Eliza Owen, and Eliza was talking about the amount of people that are actually migrated into Southeast Queensland.
Yep.
The numbers, I'm thinking it was something like our average was around about 20,000. And I think Eliza said it went up to about 80 at one stage. There was really, go back and have a listen to it. And you'll actually,
Scott's diving into stats, people.
you'll actually understand what we're talking about when we talk about that migration numbers as well.
And of course, migration, more people moving into an area puts demand on buying. A lot of people that relocate typically will rent before they buy, but it definitely has an effect on that purchasing market. The other thing that we have been able to access this month is some data from PropTrack, which has confirmed 27% of inquiries for Queensland properties are actually being made by interstate buyers. So that indicates that there's either people that are still looking to relocate, and in which case they're actually looking to purchase, or we've got that interstate buyer inquiry for investment properties here in Southeast Queensland. Especially we're seeing that anecdotally in our own inquiry at Streamline Property Buyers. We're seeing a lot of inquiry from interstate buyers wanting to buy into Brisbane, not only because of the past performance and the current performance, but the future prospects, what is coming, what Brisbane might look like in that post-Olympic Games era, the infrastructure development, the economic development, the opportunity for growth within the property market.
And also the weather and the lifestyle that we have up here. They all want to move up to Queensland, as we always say. Why wouldn't you? The other thing was that the Queensland government announced stamp duty concessions, where the threshold for first home buyers would increase from 500,000 to 700,000. That'll have a bit of an impact on especially probably the unit market more than anything.
100%. So this is news that came out throughout the month of June this year. Now, we had a previous threshold of $500,000, and of course that had become outdated as median property prices continued to escalate. So there were fewer and fewer first home buyers that were eligible for those stamp duty concessions. Now, because that threshold has been increased up to $700,000, we're going to see a shift in the demand for properties up to $700,000, because there's going to be incentives for property buyers, if they are first home buyers, to be buying products that are less than this value. Now, of course, knowing where median house prices sit versus median unit prices here in Brisbane, and we're going to provide a very comprehensive breakdown of that in this episode, it's likely that the changes that have come into play will have the biggest effect in areas where those median prices are close to the caps. And what that means is, based on a $700,000 threshold, only about 20% of houses in all of Greater Brisbane are going to be eligible. So therefore, those first home buyers that are going to take advantage of those caps are more than likely going to increase their interest in apartments and or townhouses, because about 60% of properties that are apartments or houses will qualify. So we will start to see more demand shift into those units and townhouses, I expect, off the back of this announcement. And you will recall through previous market update episodes and also episodes where we've specifically talked about the unit market in Brisbane, there has already been a high level of demand in that space. So we do expect that to be maintained or even continue to increase off the back of this announcement.
Yes, people want to get into that market, and the bank of mum and dad might come into play a little bit more on that. Auctions over the month remained still fairly solid. Clearance rate 64.8%, reported by Apollo Auctions.
Yeah, and on average, Apollo Auctions data also reported 3.2 registered bidders per auction in Brisbane throughout June. That's fairly consistent with past months, and an average participation rate. So those that were registered who raised their paddle, 65% of bidders were active during the auction. So remember, in June, we had 2 weeks of school holidays here in Queensland. We always see slightly suppressed activity in the real estate market during that time. Now coming into July, we generally see some of the sellers will hold listings during school holidays and they'll come into the market in the next month. And it's certainly something we observed with new listings decreasing again in June. So potentially we'll see those new listings normalise a little bit more coming into July.
How that comes around quick. It feels like not very long ago we we're talking about the Easter holidays, and now we're talking about the June holidays. Before you know it, we'll be in September, October holidays, and then into Christmas. So it does seem to get away, and it does have an effect on the real estate market, as Melinda mentioned, when those school holidays actually happen. Agents don't tend to list as much, and people tend to hold off a little bit when it comes to school holidays. Brisbane dwelling values. We've seen an increase of 1.2%, slightly down from 1.4%, which was reported in May.
That's right. So this is all dwellings, units and houses combined for the month of June here in Brisbane, up 1.2%. So yeah, small deceleration in the rate of price growth compared to that was reported in May, where, as you pointed out, Scott, that was 1.4%. When we look at the quarterly figures, so up to the end of June, quarterly growth in dwellings eased slightly. It was 3.7% by the end of June, whereas at the end of May, it was 3.9%. So we're starting to see a slight slowdown in that rate of growth. Median dwelling values in Greater Brisbane now sitting at $859,240. So compared to 3 months ago, if we were just to look at that median value, that's an increase of $41,676. And I think that's really important for property buyers to understand.
Yeah, and we'll obviously break it down now into, shortly, into houses and units. But if you look at the segments of the market, that again, we break this down into different segments, and that lower percentage is obviously sitting at the higher segment of the market.
So yes, just to clarify, we're seeing the more affordable properties, the lowest 25% of property values, have experienced the highest rate of growth over the 3 months up to the end of May. So the bottom 25% of property values, or the 25th percentile, have seen 5.3% growth, whereas the most expensive end of the market, so the top 25% of property values, have experienced 3.2% growth. Now, this is dwellings data, so we will see a skew because units and townhouses typically transact at the lower end of the market, but it's an undeniable trend that we have now seen for many months here in Brisbane, and it does appear to be the fact that the more affordable end of the market for all dwellings has shifted at a faster rate over the last 3 months.
Just quickly on PropTrack, obviously dwelling values, they've reported an increase as well of 0.5% in the month of June.
That's right. Yep. So same trend there, and annual growth according to PropTrack sitting at 14.14% for all dwellings across Greater Brisbane.
So house prices. So in June, house prices in Brisbane, we saw an increase of 1.1%, slightly down compared to the 1.4% last month. But obviously in quarterly, 3.5%. At the end of May, it was 3.3%.
Actually, that's 3.7%.
3.7%, sorry.
Yeah, so quarterly growth was 3.7% at the end of May. It's dropped down to 3.3% now over the 3 months up to the end of June. So there's been a deceleration in the rate of growth in the house market over the last 3 months, and also over the last month, with 1.1% growth just in June itself. Annually, though, Brisbane does maintain its position as the second fastest capital city house market in terms of that median house price growth change, trailing behind Perth. So Brisbane continues to be a strong performer looking at the national scene.
And the median house price then for Greater Brisbane now stands at $953,028. And that's an increase of $15,549 from last month, and $43,040 for 3 months.
If we just actually repeat some of those figures, $15,549 of price growth in a month in the house market in Brisbane, and $43,040 of house price growth in the last 3 months. Now, if we're going to actually quantify that over the last 12 months, that's change in median house price values of $146,247. That's a huge shift in property values for houses here in Brisbane. So, for those that are looking to get into the market, it's just important that you are factoring in that growth for any sales that you have seen occur in the last 12 months.
And those that have been in the market for a while, there's probably a bit of equity sitting in their properties if they've got some properties that they've sat on, especially since that COVID period, which I think you mentioned was about 61.5%, testing my memory again.
Which means there's a lot of people that might own Brisbane property that could leverage from that equity in their property, subject to their personal circumstances and borrowing capacities, and potentially position themselves to set up for future wealth. And if you're wanting some assistance from a team of qualified property investment advisors to help you understand what is achievable, of course, you can reach out to us here at Streamline Property Buyers, and we're more than happy to assist you to understand, how property can change your future trajectory.
Also on that auctioning, actually, we didn't mention that. I mean, when we talk about auctions, that is something we do help clients with. Where people can just contact us to help them and take away that stress of bidding at auction, where we do that for people as well.
Entry-level services, and it does, it makes a big difference when you've got professionals representing you. There's no emotion involved, and certainly we can help with some professional bidding tactics.
House prices, I should say, for PropTrack, we also saw an increase there of 0.5%, median value to $936,000, annual growth 13.67%.
So both data houses reporting the same positive growth trend across the month and across the last 12 months. So there's definitely correlation in that data.
Unit prices. So unit prices, again, still very strong.
Yep.
1.8%, following on from that 1.9% increase in May.
1.8% growth across the month of June is still huge. Yeah, it's a significant rate of growth in that unit market. And, the unit market here in Brisbane has been outperforming the house market in the last month, in the last quarter, in the last 12 months. It's the segment of the market to watch. And it's a lot of it is driven by affordability. And you'll recall earlier in this podcast, we talked about that shift in the threshold for first home buyer stamp duty concessions, and we're very confident that will also bring in some additional demand to those units. So median unit value in Brisbane currently sitting at $622,567. So that threshold for first home buyer incentives for stamp duty allows purchases up to $700,000. So a lot of units and townhouses will be incorporated or included as part of that that opportunity for first home buyers.
Now that growth, again, we like to quantify that. So that's from the 622,567, which is median value now. That's 7,138 more than last month. And over the last quarter, the median unit value in Brisbane has increased 34,774. And over 12 months, $110,305.
That's a huge change in the median value over the last 12 months here in Brisbane. It's 18.8% growth over the last 12 months, according to CoreLogic, compared to the house market, which was 15.2% growth over the same period. So there's definitely outperformance in that unit market. How long will that last? We don't know, but there's certainly not likely to be any slowdown in the foreseeable future.
PropTrack, again, with the units, an increase of 0.54%, annually 16.82%, and the median value $648,000.
That's right. So good to see the data houses both reporting the same positive growth trend in both segments of the market.
Rental market. Let's have a look at some vacancy rates. In the rental market, we've seen vacancy remain steady over Brisbane at about 1% citywide.
That was for the last 3 months up to the end of May. And when we incorporate that June data, we increased from 1% to 1.1%. So again, can be a bit seasonal. Looking at each of the specific regions in Beenleigh, in May, we were at 0.7%, June sitting at 0.8% vacancy. The CBD came down slightly from 2% vacancy rates in May to 1.9% in June. No change in East Brisbane, sitting at 1.2% month on month. Inner Brisbane eased slightly from 1.4% vacancy up to 1.5% by June. Ipswich from 1% to 1.1% across the months of May and June. Northern Brisbane, no change there. Current vacancy, one of the tightest regions, sitting at 0.8% between May and June. Southeast Brisbane, currently at 1.2%, whereas in May it was sitting at 1%. So there's been a change of 0.2% there, slightly more properties available in that region over the month of June. Southern Brisbane, we've gone from 1.1% vacancy to 1.2%, so a change of 0.1%. And finally, Western Brisbane, vacancies went from 1% in May to 1.2% in June. So we've seen very small shifts in some regions in terms of vacancy rates, but certainly nothing that is alarming in terms of the number of properties available to rent. It's still going to be very tough for tenants to find a property to rent.
Yeah, and the investors will have someone to rent it out pretty quick, I think.
Yep.
Annual change in house rents in Brisbane, it's eased slightly, 7.3% at the end of June, slightly lower than last month's 8.2%.
Yep.
And also the unit market, rents now at 8.5%, a slight decrease from last month's 9.6%.
Yeah, so according to or compared to long-term changes, these rental price growths are still significant, both in the house market and the unit market. Really strong rental price growth. Tenants will still be finding it tough, but it does appear to be easing slightly in terms of that rate of growth, which is reassuring for those tenants that are in the market looking for somewhere to call home.
So if you look at yields on that side of things, gross yields for Greater Brisbane currently stands at 3.5%, easing slightly from last month.
So that's the houses.
Houses, 3.6% last month. And for units, gross yields decreased slightly as well, 4.9% to 4.8% month on month.
That's right. So you'll definitely get a greater return on a greater gross return on your investment in the unit or townhouse segment of the market compared to housing. But of course, it's important to allocate or account for the cost of holding both asset types to determine what your net return will be. But gross rents in both segments of the market have been growing at a rate that hasn't actually kept up with the rate of growth in property values, and that's why we're starting to see those yields compress.
So a bit of a summary on the Brisbane market.
Yeah, well, it does remain robust, doesn't it?
Yeah.
And I think the outlook is definitely one of strong underlying fundamentals. We're very unlikely to see any change in supply levels in the foreseeable future. I don't know whether we're going to see more sellers come to the market. Even distressed selling is at, it's still very, very low compared to what it was pre-COVID. So we're not seeing a lot of people having to sell because of the higher cost of living or, higher interest rates. Although there was a lot of commentary about the fact that that would be the case, we're certainly not seeing evidence of that by being out on the ground, and certainly not seeing evidence of that in the data either.
Yeah, I think the only thing with the investors maybe a little bit, some investors are cashing in on that growth that we've talked about, from, as we said, from the pandemic at 61.5%. Some investors are probably cashing in a little bit where they're saying, look, they've made their money, they'll cash out and they'll make advantage of that and move on, maybe go to Europe, whatever they want to do with their money. Maybe a little bit of that, but yeah, look, I think it's still staying strong. There's not a lot of as you said, that supply and demand side of things is very, very tight.
And let's not underestimate the impact that the stage 3 tax cuts may have on property markets around Australia. Now, remember, when there's tax cuts, it effectively puts more disposable income into the hands of people, and ultimately that can increase their borrowing capacity. So that can have a systematic impact on demand, a shift in demand. So that can also have the potential to further inflate property prices if demand elevates further in the absence of supply increases. So that's something to watch as we see those tax cuts roll out and households seeing a little bit more, money coming in that they have the ability to spend.
And the supply for new housing, construction obviously cost are still very, very tight, very high. So we're not seeing a lot of new dwellings. So there's obviously that new construction side of things, very, very tight on that side as well for the supply.
And I think that's just a reason why we expect Brisbane to remain undersupplied for some time into the future. There's really not going to be any huge supply influx coming from listings or from new construction. And because of that, and yet the demand remains elevated, that's why we expect those prices to remain robust month on month in terms of those price changes.
We've got some auctions coming up in as well, where our team will be out and about bidding at auctions and also observing and watching the market. And that's something that we will be definitely updating everyone with. Obviously, what we see on the ground is just as important, I think, as the data that we also bring to you as well. So we will keep you updated, obviously, in the next couple of weeks on how things are moving, especially post-school holidays, and how the market sort of has bounced back or continues to increase really in Brisbane.
I will just share one more piece of insight, and this is from PropTrack. So they release property market outlooks every 6 months. Now, they've recently updated their outlook for Brisbane. They've revised their home price forecast to be higher than originally predicted. So it's not just us talking about, what we're seeing on the ground and what's likely to happen in the future. These are data houses that are studying property markets, and they've actually revised Brisbane's annual growth expectations by 1 percentage point of strong demand and exceptionally tight supply. And that's what we've been talking about in this podcast, giving you all of the latest information based on the data that is available and also based on our insights from being on the ground, out and about on weekends.
Excellent. There's a market update. So hopefully that's been good information again for everyone. Melinda puts a lot of work into putting all this information. As I mentioned a few times, if you want to go to the website and have a look at that blog, read through that information, learn a little bit more and see what we're talking about, jump on there and have a look. If you need help, reach out to the team at Streamline. We're here to chat and more than happy to chat to people about what's going on in Brisbane. So as usual, I will let Melinda wrap it up. It's been great talking again from beautiful sunny Brisbane, and we'll talk again next week. Thanks very much for listening, and bye for now.
Thank you once again for joining us here on the Brisbane Property Podcast. As always, if you have enjoyed this episode, please share with friends and family. Please leave us a review. It does help other viewers and listeners to find our content. We look forward to bringing you more information about Brisbane, more exciting guests, and more market updates in the near future. Until then, have a great week and bye for now.